Hello, this is Alex from ONG Tax and Accounting Services. So in this video, we're going to talk about foreign persons and the U.S. taxation of software or computer programs under the regulation 1.861-18 that was issued somewhere back in 1999. Now, before we start, let me just throw a word of caution out there that this video is for educational purposes only, and it's not meant to be a legal or tax advice. And if at any point in time you need a legal or tax advice, you should always consult with a competent tax attorney or a CPA who can be able to review your specific situation and help you out. So let's talk about Treasury Regulation 1.861.18. This Treasury regulation contains 18 examples illustrating how a transfer of a computer program can be solely categorized into one of these four categories. So this regulation deals with computer programs. So if you are you're a software engineer and you work on computer programs, whether you're servicing computer programs or you're creating computer programs or you are doing a whole lot of things with computer programs and software, this video is for you. And this video specifically going to focus on foreign persons that are providing computer program or services to U.S. customers. So what the Treasury regulation is essentially doing is when you deal with computer programs, the Treasury regulation says that your transaction can only fall into one of these four categories. It cannot be both. It could be one of these categories. So if you deal in computer programs, there may be a situation where you could have a transfer of a copyright right in the computer program itself. In this video, we'll talk about what a copyright right is and explain it a little bit to see if you understand it. There can also be a transfer of a copy of the computer program itself, which we call a copyrighted article. Again, we will explain what a copyrighted article is in this video. Also, people dealing in computer programs could also be involved in the provision of services for the development or modification of that computer program. There could also be a provision of know-how relating to the computer programming techniques. And then again, the 18 examples in this Treasury regulation also illustrates when income from the transfer of a computer program can be considered as a service income, sales income, royalties, rentals, or lease. Section 1.86118 does not explicitly deal with other digital content like digital music, digital video, cloud transaction models such as software as a service, as SaaS, as we call it, or platform as a service, PaaS. Now, there is a proposed regulation out there which has been in the pipeline for a very long time and the IRS has not finalized it yet. And if you want to take a look at that proposed regulation for this SaaS and PaaS and digital music and video, digital video, take a look at section 1.861-19. That deals more with other digital content such as the one that I'm talking about here. But for the purpose of this video, we're going to take a look at section 1.861-18 because that regulation was finalized back in 1998, between 1998 to 1999. That regulation is solid and it has 18 examples that we're going to talk about. We'll not talk about all the 18 examples here, but we'll pick one of those transactions, which will actually focus on copyrighted article. Because when we talk about it, it will determine whether a transfer of your copyrighted article is either a sale or a grant of a lease in which you collect rental income. This topic is very important because as a software program designer, you want to know your source of income. Number one, you want to know whether this transfer or the activities you're dealing with when it comes to computer program is regarded as a service income, it's regarded as a sale, or it falls within one of those categories where you're collecting royalties or rental or lease income. Now, it's also important that you know about the U.S. income sourcing, specifically as it relates to foreign persons when it comes to computer programs. A foreign person engaged in computer programming cannot determine their U.S. tax liabilities without considering the U.S. source income rules. Very important. Now, the source of income is important to determine whether the income you're earning is considered U.S. or domestic income or foreign source income. The United States taxes foreign persons, that is non-residents and foreign corporation, on two types of income. Number one is the U.S. source investment income, and number two is the income that is effectively connected with U.S. trade or business. Now, the difference between the U.S. source investment income is it also includes passive income or any type of investment income. And then the income that is effectively connected with U.S. trade or business, it is also your U.S. source income, but it relates more to active income. Income that you make when you perform active services or you make sales or provide services in that manner. So these are the two groups of income in which a foreign person can be taxed in the U.S. Now, moving on, Internal Revenue Code Section 872A and then 882B exempts foreign persons from U.S. taxation on foreign source income. So it's very important that you know about that distinction as well. Foreign persons prefer foreign source income because such income generally avoids U.S. income taxes, with only some few exceptions. So what we're trying to say here is, if you are a foreign person and you earn foreign income, it's generally avoid U.S. taxes. You don't have to pay taxes on it. But there are some few exceptions where a foreign source income could be seen as effectively connected income with U.S. trade or business. But that is beyond the scope of this video. This video is basically to look at foreign persons engaged in computer programming and how certain transactions are categorized and how those incomes need to be sourced. So let's look at how the IRS classifies transactions related to computer programs. Treasury Regulation 1.861-18, as I have already stated, contains 18 examples that illustrate whether a transfer of a computer program is solely within one of these four categories. So within these four categories that the IRS has provided, you could be engaged in computer program and then where the transfer of that program is considered as a copyright right in the computer program. And so in that case, you could have a transfer of the copyright, and that could also be broken down into two pieces, right? It could either be that transfer can be a sale or exchange, or it could be a licensing agreement that is generating royalty income. The second set of category that the IRS may place your computer program income into is when you transfer a copy of the computer program, which is a copyrighted article. So we're going to explain this concept, the copyright right and then copyrighted article. We're going to explain when you have a copyright right and then when you have a copyrighted article. And then when you transfer it, or what kind of income are you making? We'll also look at where are we sourcing those income when you make them. So the second category here have a transfer of the copy of the computer program, where the transfer can also be seen as either a sale or exchange, or it could be seen as a lease generating rental income. In this video, we're going to focus on when someone transfers copyrighted article and when it's actually considered as a sale or exchange. We're going to talk about lease later on in subsequent videos that we'll do. So if you're watching this, make sure you hit the subscribe button so that whenever we come up with new videos on some of these topics, you can easily get to watch them. And then the third category that the IRS provides that computer programs may fall into is a provision of services for the development and modification of the computer program. And then the last one is the provision of know-how relating to computer programming techniques. Like I said, this video, we're going to focus on when do you have copyrighted article and when is that copyrighted article considered as a sale or exchange upon its transfer. Now, before we go deep into the concept of the copyrighted article and how the income is sourced and what type of income it is when you transfer a computer program, let's dive into the basic definition of a copyright right. So a copyright is an original work of authorship, which is fixed in any tangible medium of expression. A copyright protects an original work of authorship. So when we talk about copyright, think about the following. Let's say it could be a short story you wrote, an article you wrote, a computer program you invented, a song lyric or music you composed. The original creation of these rights may also be preserved into tangible and physical objects such as a disk, CDs, USB drive, or purely electronic transmission over the internet. Now, in summary, what copyright means is that as soon as you create an original work of authorship, you have automatically created a copyright, and it prevents others from copying, publishing, or performing your work or the specific program you've created. So copyright is a very complicated law, and this is just my basic definition. So now that you've been able to get a bit of a understanding of what a copyright right is, let's look at what is a copyrighted article. Now, a copyrighted article comes about when your original work of authorship is preserved in a tangible physical object or purely electronic transmission over the internet. So if those copyrighted content, the original work of authorship, is also made available for download over the internet. Now, for example, if I invent a computer program, let's call it OGX or a software, and I preserve it on a disk, on a CD, on a USB drive, and you buy it, because I have preserved it on a tangible medium, that thing you're holding is a copyrighted article. I'm still going to be the copyright holder unless I specify in the contract that I'm also selling you the right to the computer program or the software. In other words, if you, the buyer, receives ownership of the physical property containing my intellectual property for your own use, you have a copyrighted article. If I do not give you certain rights, such as the right to reproduce, right to make derivative work, right to distribute it, you don't have any right in my computer program. All you have is a physical copy of my intellectual property, which is put on a disk or a CD, but I'm still the copyright holder. So I hope that distinction makes it clear. So let's look at a copyright article. When is a transfer considered as a lease or royalty? As an inventor, when you invent something, as an inventor of a software program or a computer program, whatever spectrum you fall in, I can give you some or all of the following rights through licensing, royalties, or leasing agreement. So whenever I give you rights, I can give you one of this right, I can give you two, I can give you three of this right, or I can give you all of it. The moment I give you this right, I'm no longer selling a copyrighted article. I'm actually selling the underlying intellectual property, your right to use some of it or all of it. These are cases in which a transfer of a copyrighted article can be seen as generating licensing fees or leasing agreement. Usually if it's in a tangible format, then the income that you get from it is a lease or rental income. If it is intangible, then you get royalties. You get leasing income as long as you have given some or all of the following rights that I'm going to mention. First, number one, the right to reproduce, right to make derivative work, the right to distribute copies of the work, the right to perform the work publicly, right to display the work, and then for sound recording, the right to perform the work by digital audio transmissions. Now let's look at the transfer of copyrighted article and when is it considered as a sale. Now let's give you some clear examples here. Let's say if I invent a computer program or software and I place that program on a disk, that means that a copy of that program now exists in a tangible medium. And then in that, the agreement says that you, the purchaser, will forever own the disk. And you, the purchaser, is not required to return or destroy the disk after a period of time. I may also decide to make the program available for download in exchange for a fee over the internet. That's all good. The purchase agreement will grant you perpetual ownership of the digital download, and an electronic lock cannot be activated to render the program inaccessible. Now, the purchase agreement may also allow you to make a backup copy of the program onto a disk. The purchase agreement may also permit you to sell or resell the copy. The copyright owner can make hundreds or even thousands of copies of the program on a disk and permit you, the purchaser, to resell them. Under the agreement, you cannot reverse engineer, you cannot decompile, you cannot disassemble the computer program. So in all of the circumstances that I have mentioned above, you will become the owner of the copyrighted article, but you will not have the following copyrights specified below, such as the right to reproduce, right to make derivative work, right to distribute copies of a work, right to perform the work publicly, right to display the work. If it's a sound recording, the right to perform the work by digital audio transmission. As long as I don't give you any of these rights, but you have my intellectual property stored in a tangible medium. You purchase it, you pay a one-time fee, and then you've also been advised not to reverse engineer, decompile, or disassemble the computer program. You have a copyrighted article. You've purchased it. So therefore, you have made a sale, and the payment made to me, the copyright owner, is considered as a sale income. It is not a grant of a lease. We'll explain more why it is not a lease, because this confuses a lot of people. Now, many people doing computer programming or involved in the business of computer programming either want their income to be considered as a sales income, or they want it to be considered as a service income. Now, when you have a service income, that means that on the federal level, for federal tax purposes, not the state level, services income are sourced to where the services are performed. So if you sit in India and you provide computer program services, that is where the income is going to be taxed. For the state level, you have to do a deep analysis and figure out which of the states you'll be paying taxes to. The same thing applies to sales income. Sales income, when a foreign person sells something into the United States, of course it is a U.S. source income because you're selling to U.S. customers within the U.S., but the income could escape taxes if it's determined that your activities in the U.S. is not effectively connected to a U.S. trade or business. So that distinction is very important. So a lot of the time, foreign persons want their income to either be considered as a sales income or services income. They don't like royalties or rentals because royalties, assuming you do not come from a treaty countries, you get hit with a 30% fixed tax withholding. And if you come from a treaty country, sometimes you get a much lower tax rate. But overall, foreigners doing any kind of business with U.S. customers prefers that their income should either be a sale income or services income because there's a favorable treatment there, assuming you're not engaged in U.S. trade or business. Based on all of these factors that I've talked about and the circumstances, I have made a sale and the payment made to me, the copyright owner, is considered as a sales income rather than a grant of a lease. Now, since this concept confuses a lot of people as to when do you determine a transfer of a computer program is a lease or a sale, I'm going to put it into a summary a bit and see if it helps you out. So in summary, why is it a sale? Why is everything that I've talked about right now a sale and not a lease? Pretty simple. As long as you own the copies of that copyrighted article in perpetuity, you've paid a one-time fee. And as long as I, the copyright owner, did not allow you to use some or all of the rights mentioned earlier, then the transfer will be considered as a sale. So in all of the scenarios I explained earlier, you could see that the buyer or the purchaser who is buying the copyrighted program or the copyrighted article bears the risk of the loss and the right to use the copies in perpetuity. When we say in perpetuity, it means you have the right to use that specific copy of that intellectual property that's put on a disk or flash drive. You have the right to use it forever. In other words, the benefit and the burden of ownership has been transferred to you, the purchaser. For example, if you buy the disk containing the computer program and it gets lost, you cannot call me to get a refund because it got lost in your possession. So if you want another computer disk, you have to call me and probably purchase a new one. That's why we say that the benefit, because the benefit is you getting to use that computer program, which is stored on the disk. The burden of ownership is in case it gets stolen or it gets destroyed, you're stuck with it. You're kind of screwed because then you have to buy another one. The buyer also pays a one-time fee or single fixed payment for the right to have that copyrighted article. So it could be whether the copyrighted article is delivered to you through a disk or download. Okay, and you're paying a one-time fee for that. And then as long as no copyright right has been transferred, remember the copyright right we talk about, there are 6 of them. The right to reproduce derivative works, the right to distribute copies of the work, the right to perform or display the work publicly, and then for sound recording, the right to perform the work by digital audio transmission. So those are the copyright rights. As long as none of this has been transferred to you and you just have a physical copy of the computer program on a disk or download and you own it forever, the owner cannot deploy a code that makes it inaccessible, then that means that you're the owner of that article and you can use it. But doesn't mean that you can explore or exploit that copyright right that we've stated. So in summary, if insufficient benefit and burdens of ownership of the copyright article have been transferred, meaning that if the copyrighted article has been transferred to you, but looking at all the facts and circumstances, you really don't have much of a benefit and the burdens of ownership, then such that you are not properly treated as the owner of the copyrighted article. So when this happens, you are not actually treated as the owner of the copyrighted article, and the transfer is deemed as a lease that's generating rental income. So one example I can give you is, let's say you buy a disc from me and I tell you to use the disc for 1 month. After the month, you're required to return that disc to me. That means you don't own it. You're actually renting it, because if you own it forever, you will not be required to return it to me. The same thing with download. You download a computer program on your desktop, and then after a month, the owner or the software producer or whoever invented the software deploys a lock code to lock the software such that you cannot use it unless you repurchase it again. That is also generally considered as a lease or rental income. Now, let's look at the income sourcing rules, because we've talked about what a copyright is. We've talked about a copyrighted article. It's now time for us to look at what the sourcing income rules are. And in this video, because we are focusing on when the transfer is considered as a sale based on all the circumstances I have provided, let's take a look at how the income is sourced in the US when it's considered as a sale instead of a lease. Now, income sourcing rules categorize income as either US source income or foreign source income. Income from transactions that are categorized as sales or exchange of copyrighted articles are sourced under the following sections. So, for example, you have section 861. 861, the header, talks about income from sources within the United States. When you go deep to subsection A6, it talks about the sale or exchange of inventory property. So if you go through this code and you want to know how income from sources within the United States is treated, and if it's determined to be an inventory property, then your code that you need to use is 861A6. You have 862A6, which also talks basically about the same sourcing rules, but this talks about income from sources without the United States. Without means that income from sources outside the United States. Sales or exchange of inventory property when it's sourced outside of the United States. And then as a foreign person, you need to know how that is going to be treated. And then they have section 863 have some special rules that you can take a look at. Section 865A, B, C, and E talks about sourcing rules for personal property sales. When we say personal property is anything that's not real property. Anything that's not real property. So think about equipment. Think about equipment, cars. Think about your towel. Think about your caps. Those are physical items I mentioned, but personal property can include intangible assets. So it could include patent, goodwill, trademark, copyright, right? They are all intangible. They are also personal property. If you want rules, the sourcing rules as it regards to personal property, then you have to look at Section 865A, B, C, and E as appropriate. And once again, properties are divided into two. We have real property and personal property. So personal property is properties that are not real property. So, and then within the personal property, you would have intangible personal property, and then you have tangible. Intangible are things you don't see, like as I've stated. You have trademark, copyright, goodwill, even stocks are intangible assets. And then you have tangible assets such as computers, furniture, equipment, anything that's not real estate. Even animals could be personal, tangible property. So if you want to know the income sourcing rules as it relates to the sale or exchange of copyrighted article, these are the code sections you should be using. Now let's take a quick example here, and this example was taken out from the Treasury Regulation 1.86118. So the fact here says that Corp A, a U.S. corporation, owns a copyright in a computer program. So let's just say it's called Program X. The U.S. corporation copies the Program X onto a disk. The disks are then placed in boxes covered with wrapper on which it is printed and is generally referred to as a shrink wrap license. The license is stated to be perpetual, which means that whoever buys this owns that article forever. And under the license, there's not going to be any reverse engineering, decompilation, or disassemble of the computer program. It's not permitted. And then the transferee, here, when the code says transferee means the purchaser. So the purchaser receives first the right to use the program on two of its computers. So for example, the purchaser purchases the Program X on a disk. They are being allowed to put it on their laptop and a desktop. And then provided that only one copy is in use at one time. So meaning that if they purchase it and they use it on the laptop, only one copy can be used at one time. Meaning if you're using it on a laptop, you cannot use it on a desktop. But you can use it on a desktop and then you have to forgo using it on a laptop. So it can be used one at a time. Can use it simultaneously. And then second, the right to make one copy of the program on each machine as essential step in the utilization of the program. So this right is also provided. Now let's continue. The transferee, which is the purchaser here, is permitted by the shrink wrap license to sell the copy as long as it destroys other copies it has made and imposes the same terms and conditions on the license or the purchase of its copy. So it says that even though you've purchased the disk and you've probably installed it on your desktop and your laptop, maybe it will come to a point in time where you don't need that specific disk or program anymore. So you want to sell it. For example, you want to put it on eBay and sell that copy that you have. This example says, yes, in the shrink wrap license, you can resell it, provided the one that's also buying it knows about this licensing and the fact that they cannot decompress or they cannot decompile, they cannot do reverse engineering, they cannot disassemble the computer. If you're selling it to another person, then it means that that person has also acquired the copyrighted article. And then it also says that the computer program are made available for sale to the general public in country Z. Okay, so here you have a U.S. corporation that's making that disk or the computer program available to the general public in country Z. Let's just say that country is maybe Germany or Spain or Netherlands or anywhere. And then in return for valuable consideration, P, a country Z resident. So let's just say in return for valuable consideration, Paul, a German resident, receive one of such disks. So he receives it with all of this agreements stipulated within the article or the computer program. And so he receives it under the conditions that's spelled out. Now, let's look at the analysis. Now, in the analysis, the IRS says that the fact that the parties call this license is not determinative. This means that the parties can call it whatever they want. But when we look into the tax code, we're going to use the tax law to define what the transaction actually is. So if the transaction is within the tax law, if it's a sale and you call it a license, that does not mean that it's necessarily a license to generate rental or lease income. That's not how it's going to work. So the IRS is saying that the label you put on your transaction is not determinative. It's not what decides how it's going to be treated. So none of the copyrights described earlier have been transferred in this transaction. As you can see in the example, it says that the purchaser of the computer program cannot decompile. They cannot do any reverse engineering. Basically, they cannot do anything other than owning the software and using it for their purposes. So when you look into the fact, P, let's say Paul from Germany has purchased or has received a copy of the computer program. Therefore, Paul has acquired solely a copyrighted article. Why is it a copyrighted article? Because it's put in a tangible medium such as a disk. Now, it could also be a copyrighted article if it's made available for download. It's still okay. Some of the examples within the Treasury regulation gives some example where it's actually a download. It's delivered through the internet where the purchaser can download it. Now, taking into account all of the facts and circumstances, Paul is properly treated as the owner of the copyrighted article. So just like the initial analysis we did, because he has to pay a one-time fee, because he had received the article on a disk or the computer program on a disk, and then because he has been restricted on doing certain things with the CD, he does not have copyrighted rights. But he is properly treated as the owner of the article or the copyrighted article. Therefore, there has been a sale of a copyrighted article rather than the grant of a lease. This is also important, so take note of that. Let's do more analysis because I want you to understand this concept very well on why example 1 is not a lease, but rather being categorized as a sale. The copyright holder here transferred a copyrighted disk, but it did not transfer any of the rights that we've stated above, such as the right to reproduce, to adapt, to distribute, to perform, to display the work. None of those were transferred in this example. The item is a copyrighted article because it came in a tangible copyrighted disk containing pre-written software. Once again, the IRS provides some few examples where the program can also be delivered through the internet, and then the customer can download it and pay a one-time fee, and the IRS still sees it as a sale of a copyrighted article. So it's very important that if you're looking for these examples, go into the Treasury regulations and check the examples as it relates to your situation. Let's move on. Corporation A is selling copies of its copyrighted work to the public in country Z. So let's say country Z is, like I said, Germany or Switzerland or Poland or Spain, anywhere. The licensing agreement is used because computer programs are susceptible to reverse engineering, decompilation, or disassembly. And that's really true. If I sell my disk to you, if I have a computer program, I put it on the disk and I sell it to you, one of the greatest worry that I will have is that you may want to reverse engineer, or you can decompile or create a duplicate of that software and call it your own. So it's very important that I put it in the license agreement that there is restriction on what you can do with this disk. The agreement also puts you, the customer, on notice that Corporation A is not selling ownership of its intellectual property. And we've stated what goes into intellectual property, those rights. It's putting you on notice that it's not selling any of those rights. So that's also important. Now, rather, you, the buyer, receives ownership of a physical property containing the intellectual property for your own use. So here you have a computer program which is placed on a disk. The computer program itself is an intellectual property. It's placed on a disk. Once it's placed on a disk, it becomes a physical property. So you own that physical property and you can use that computer program for your own personal purposes or for business purposes. But you're also restricted, as we stated earlier. Based on all the facts, we can see that here the buyer has sufficient ownership. They have sufficient benefit and burdens of ownership. But assuming the buyer did not have sufficient benefit and burden of ownership of the article they purchased, such that the purchaser is not treated as the owner of the copyrighted article, then the transfer would have been seen as a rental income. Once again, quick example. Let's say you had purchased the computer program that's now on a CD or on a disk or USB drive, but then after a month, the owner of the copyright tells you after a month you need to return the disk or destroy it. You don't own it anymore. You can't use it anymore. In that case, you don't own the actual property perpetually. You don't own it in perpetuity. So it cannot be considered as a sale. You are actually leasing it. So the income that the seller is making out of this is going to be a rental or lease income. It's not going to be a sale. Let's look at how the income is sourced under the example 1 we provided. Because this is a U.S. corporation selling into country Z, a foreign country, our analysis will start from section 862A6, which defines gross income from foreign sources outside the United States. And section A6 specifically talks about inventory, the sale of inventory. The U.S. regulation says that a sale of inventory purchased from outside the United States and sold within the U.S. is U.S. source income. That is section 861A6. But in this case, we're going to use section 862, which talks about gross income from sources without the United States. So let's do reverse engineering in this aspect. So this code, 862A6, talks about the fact that if you have inventory that's produced here in the US and you sell it outside of the US, where the sale took place is where the income is sourced to. So here, then you have what? A foreign source income. So here the US company is going to have a foreign sourced income. It's as simple as that. If you turn this example around and let's say if Corporation A was supposed to be maybe an Indian company, produces this disk and sell it into the US and the US customer purchases it, then it will be a US source income because the product was produced outside of the US and then sold within the US by a US person or a US client, or it was sold within the US actually. So it becomes a US source income. Section 862A6 states that gains, profit, and income derived from the purchase of inventory property within the meaning of Section 865 within the United States and its sales occurs without the United States. So without meaning that outside the United States shall be treated as income from sources without the United States. So it means that it's basically the same thing that I keep saying. If you produce something here in the US and you sell it outside of the US, the income is foreign source income. So that's basically it. If you reverse it around, if you produce something, if you're a German citizen or you're a Polish citizen or you are from Russia or you're from Ukraine or you're from Netherlands, you produce computer program there, you put it on a disk, you send it over to the US to sell. Once the sales take place in the US, you have a US source income. So you need to know about how that income is going to be taxed when you have a sales income that's US source income. So in other words, inventory produced or purchased within the US but sold outside of the US shall be considered as foreign source income, which is very important. If you were a foreign person, if we turn this around and you were a foreign corporation or a foreign person and you sold this item in a foreign country, that would be foreign source income and it will not be taxable. A US corporation pays tax on worldwide income. So in this example we gave, it's a US corporation that's selling its software or computer program on a disk outside of the US. So that US company has a foreign source income, but this US company is going to be taxed on their worldwide income because it does not matter if the income here was foreign or US sourced. All right, so I hope this helps you guys out. In our subsequent videos, we will look at situations where a foreign person produces a computer program, puts it on a disk, and then sell it into the US and how the income is going to be treated. So I hope this helps you out. If it does, please click like, share, and subscribe, and we'll talk soon. Bye.